Hello, everyone, and welcome to our monthly mining coffee chat. I'm John Price. I'm accompanied by my colleague, Andreas Farge, and possibly some others from AMI, and we're very pleased to have you back. I think some of you have, or most of you have attended these mining chats in the past. We're going to, with your permission, just wait another minute or so, make sure everybody's in the call before we launch. Today, we're going to be talking about really a sort of highly condensed summarization of how we see risk across the main mining jurisdictions in the region, plus a couple of smaller jurisdictions. And let's go ahead and start. Today is going to be a bit of a monologue, and I do apologize for that. Normally, we like to make this a much more interactive affair, but there's a lot of information to share with you, and so I wanted to do that. There will be time at the end to ask questions, and of course, you can post your questions at any point in time. By now, I'm sure you're seasoned Zoom users, but you can post those in the chat mode. And I'll either address them as I'm going or towards the end. And also, please feel free to add comments as well. Okay, so let's begin. Very briefly, this is our legal notice. It goes without saying that any business decision you make shouldn't be solely based upon the intelligence that we share with you today and the insights that we share with you, but also upon multiple sources. Very briefly, I think most of you are familiar with our firm. We do work in different verticals. Our mining practice has been around now for about 15 years, and we've done dozens of projects, if not by now hundreds of projects in Latin America and Caribbean markets. Typically for either mining companies or those who finance mining projects. And as a result of that, we tend to be hired at two junctures. One is pre-investment, doing ESG style due diligence around the support and interference and risk associated with a project. And then typically for miners in operation, we help them provide an extra set of ears and eyes on the ground and help them interpret what the risks are and what their focus points should be for their communication strategies, for their PR strategies, their government relations strategies, and of course their CSR strategies. So keeping those strategies constantly actualized with fresh intelligence is really the role we play on an ongoing basis. Today, we're going to be talking about national level risk paradigms associated with political risk, much of it inspired by COVID. But I just want to remind us all that in spite of the importance of COVID, in spite of the generic effect that high metal prices have, particularly precious metal prices have on changing the risk environment, 80% of the risks you face today at the project level are much closer to the project. They are to do with the intersection of interests of the stakeholders close to the mine, be it the local community, local government, those who compete with the mine for water. They might be agriculture, they might be tourism, they might be informal miners. There might be illicit interests nearby the mine. These are the factors that we believe, and I think the industry's in agreement, are what really determine the viability of projects today and should really be the focus point of any due diligence that you do on a project. That said, today we are going to be looking at more macro issues, political risk issues at a more national level and even regional level. And much of what I'm going to be sharing with you in a very consolidated Coles Notes fashion is based upon a pretty intensive analysis that we conducted 3 weeks ago in our Latin Risk Symposium, where we invited 10 risk analysts from across the region covering 10 different markets, and they provided an in-depth analysis. And if you go to the link there on the page, or if you have a phone and you point it at the QR code there on the right, you can get more information about how to download that webinar. It was a 3-hour recording against really dense, really comprehensive risk analysis of the 10 leading markets in the region. Today, I'm going to give you a very consolidated view of that and also try to interpret it for the miner's perspective. At this point, Andres, I'm not sure if you've had time to set this up, but we're hoping to poll you and tell us, of these jurisdictions, of these mining jurisdictions in Latin America, which one worries you the most? And we'll let you interpret the source of worry, whether it's political or operational or security, or that's for your own interpretation. So very curious to hear what you have to say. We all have our biases, and most of us probably only operate in just a couple of these markets. So by virtue of that, might discard some of the other countries, but very curious to hear what you have to say here. We'll give you just another minute or so. We're at about 60% of those polled have voted. So if you have an opinion to share, please go ahead and vote. Okay, so what we're seeing here is a pretty even split between, again, this is not exactly a representative sampling, but we're seeing a pretty even split between Argentina, Colombia, and Mexico, and Peru. So no dramatic storytelling there in terms of one jurisdiction that stands out. I will share that with you, and of course, we'll be happy to circulate this document afterwards. I want everyone to know that. In contrast to last week's recording, which was by virtue of the panelists' request confidential and not to be shared after the live event, this one will be shared with you all. Okay, let's move on. I'd like to very quickly begin by sharing some insight as to what are some of the risks that have occurred essentially because of COVID, and how those risks or how those trends translate into political risk pretty much in every market in Latin America, one or two exceptions provided. So the first is the tremendous fiscal deficit that COVID has provoked in, I would say, just about every government around the world. The most important source of that deficit is the decline of taxation capturing. So in Latin America, almost every country went into lockdown, some quite severe. And of course, this really hurt the ability to collect sales tax in particular. And the other factor was how much government spent in terms of on fortifying their healthcare systems. And probably the biggest ticket item was, in the cases of Brazil, Chile, and Peru, and to some degree Colombia, was making transfers to small business owners and to the working poor, many of whom, if not most of whom, are informally employed. And those countries did a good job at that, but it comes with a huge fiscal cost. And it's fair to say that Latin America generally is a under-indebted region of the world compared to, say, the US or Canada or Europe or even China, Japan. Those countries have much higher debt levels per capita than Latin American countries. However, the tolerance that lenders have for high foreign debt levels or debt levels of any kind, domestic or foreign, amongst Latin American sovereigns is much lower. And so because these countries rely on foreign capital to finance government and even their corporate sectors, what that means is that they are beholden to the ratings agencies and how those rating agencies see the debt levels. And I think it's fair to say that everybody gets a pass in 2020. In 2021, you will begin to see the ratings agencies taking a much closer look at how countries around the world are managing debt. And if they are seeing a movement in the right direction, whether it's increasing tax take or decreasing costs, then they will probably let a degree of overshoot of deficits also be tolerated in 2021. But if they see that that trend is not happening, then you will begin to see downgrades. And of course, downgrades are incredibly harmful to governments in Latin America because they raise the cost of capital and it really limits what they can do with their spending. So governments are going to face this real conundrum over the next 24 months of how do I continue to support recovery in my country? How do I keep the poverty rates from increasing even greater and the distribution of income from worsening, because it's the working poor who were not able to transfer their work indoors and to home that are being hurt by this. But at the same time, how do I placate the ratings agencies and international lenders? And this is going to have an impact on successful industries like e-commerce, like mining, like agricultural exports that tended to continue to thrive. And so there's going to be a lot of fiscal pressure to tax successful industries more in an effort to raise taxation without necessarily raising it at a personal or sales tax level, which is often being the case in Latin America. Another important issue, which is related to what I just mentioned, is the distribution of income. We know that although this data has not been updated by governments in the region, it will soon. And we are anticipating that particularly Argentina, Mexico, and Colombia are going to be in trouble because they were not able to fund a counter-cyclical spending. They have high levels of informal employment. And they had, particularly Argentina and Colombia, strict lockdowns, which really hurt the working poor. In Chile, Peru, and Brazil, in spite of the case of Peru having high informality levels, the fact that they spent lavishly and did a very effective job of getting money to the poor helped mitigate this process. This is important because we have studied we've been studying these markets for 27 years. There is a strong correlation between a worsening income gap and a pivot towards populist politics, usually the left, but frankly, populism in Latin America is difficult to define versus left and right. It just means populism, which means less strength of institutions, less rule of law for companies trying to defend their place in that country. And that's problematic for most. Okay, another interesting trend, and I think you'll see this in other parts of the world as well. In the early stages of COVID, it was politically astute to take a very hard line on cracking down on COVID. And those who did in countries like Colombia, in countries like Argentina, in Peru, in Chile, they realized incredible gains in popularity. But as those lockdowns continued and the perception of COVID shifted from a health crisis to an economic crisis, which I think is where most countries are viewing it today, those lockdown measures ended up working against the incumbent leaders. And you see how support has fallen dramatically in Colombia for Duque. It's fallen in Argentina. It's fallen, well, Peru, of course, has new leadership, so it's a tough one, but it's fallen in Chile. It's fallen in Costa Rica. Now, in Brazil, where they had notoriously weak lockdowns, That hurt Bolsonaro at first, but has actually helped him more recently. So I think this is evidence again of a shifting paradigm in what is COVID in the minds of Latin Americans. Yes, it's still got health implications, but the economic implications are greater for more people. Okay, let's dive into country level analysis here. And let's begin. We've taken an alphabetical order here for no reason other than it helps change the sequencing of what is usually the biggest mining jurisdictions to the smallest, and often we run out of time when we get to the smaller ones. Again, I want to reiterate that the comments on the left are a function of this event that we had 3 weeks ago, and I encourage you to get access to the full download of that risk symposium event, and the links are included in this document and will be circulating this document. But in Argentina, of course you have a cycle of inflation and currency depreciation that is essentially lost control, and the measures taken by government to rein it in have been half-hearted. We see a real issue with the worsening of income gaps. But we also know that Argentina is a decentralized federalist system where the rules, the taxation policy around mining is decided at the province level. So in fact, the crisis today has both positive and negative implications. First of all, your operating costs are going to remain low when measured in US dollars. Now, the devaluation and lack of currency can have some real problems, and I don't have this in the negative, but have some real problems in terms of bringing equipment in a timely fashion and things like that. But generally, your labor costs and any of your supplier costs in Argentina are going to remain cheap because of depreciation. If there's going to be continued lack of support for the Peronist government, then we may see a pivot again to pro-business in the next business cycle. And that would generally be a positive for most businesses, including mining. We also know that when things get tough at a national level, the transfer payments on federally collected or nationally collected taxation tend to trickle, and therefore it is up to the provinces to fund their own budgets. Now, the ones that are experienced mining jurisdictions tend to be prudent about continuing to placate the mining industry, doing what they can to attract miners. Those that are less experienced with mining may be tempted to raise taxes on mining. So you really have to take a look at the per province level to understand the political environment and attitude towards taxation. That said, although the federalist system in Argentina, combined with the mining reform undertaken in the Macri administration, does limit the national government's ability to tax the mining sector, there's always ways to do it. And so whether it's fees or it's other forms of payment, they may be looking to mining to help cover their deficits. And another real issue that we've seen in other industries, regulations that prevent the firing of employees, and this has really hurt some industries that have been where demand has collapsed under COVID. You may see local hiring minimums imposed at a higher levels in Argentina, which is a problem because Argentina does not have a huge mining industry, does not have great mining training infrastructure in place, and does often rely upon imported labor. So those are things that we think you should keep an eye on. In Brazil, Bolsonaro continues to be a divisive figure with a significant base, but also lots of negative support. But what's, I think, more important is the change in support for him and his government at the congressional level. He used to rely upon sort of outlier parties, this mishmash of outlier parties that were not part of the establishment. And that was important because part of what got him elected was a non-incumbent, disruptive, clean the swamp, new face in Brasilia. But what has happened is he has lost the support of those small parties because their focal point or their one single issue hasn't been addressed in their minds sufficiently by the Bolsonaro administration. So he relies now more and more on establishment parties to prop up his government. That's going to dilute his reform agenda somewhat, and certainly going to dilute the pretty remarkable fiscal discipline that he had put in place. But it should also help in terms of continuity of a pro-business government. We also know a very interesting pivot under COVID in Brazil that only a few people are talking about is the fact that in the past, Brazil has relied a lot on the flow of hot money into its capital markets to keep liquidity levels adequate. And just the excellent work done by the central bank over now a couple of decades has created enough of a national savings cluster that Brazil doesn't rely on foreign capital to the degree it did in the past. And as a result, the central bank has taken a very dovish approach to COVID with all-time record low interest rates, 2% Selic rate. And what that's done is it's helped reactivate the economy without strengthening the real. And so we may see a whole new era of cheaper real going forward. And this is very interesting to miners because Brazil, when those resource prices go up, when iron ore goes up, when certain food commodities go up, it can be a costly place to do business. And this new central bank sort of shift is going to add definitely a couple of points to the bottom line of anybody operating in Brazil, particularly if they're selling in dollars and much of their costs are in local currency. There is going to continue to be friction between the executive branch and the courts. Certainly, the exit of Sergio Moro, the Super Moro, as they call him, the judge who led the Petrobras investigations, and he is now out of the government, and the courts, I think, are as independent or more independent than ever. And this can be an issue around some of the environmental regulations and the changes that the Bolsonaro administration has tried to make to those that have been contested in courts. And you couple that with the fact that Brazil has lost its biggest cheerleader on the world stage, Donald Trump, means that there's going to be more of a sort of global reputational risk associated with doing business in Brazil if that business is perceived to be infringing upon the environmental integrity of Brazil. So there will be a new level of oversight, I think, to mining operations in environmentally sensitive areas, which is particularly the case in the northern states of Brazil. Okay, in Chile, of course, we had a very interesting plebiscite that where the country resoundingly decided it wanted to rewrite its constitution and do so with a somewhat innovative approach with a constitutional assembly made up of mostly non-elected officials, with a minimum number of them being females. And all of this has created both a level of hope and a sense of uncertainty in Chile. interestingly enough, it was the establishment, the elites, and that would include most big business owners and certainly miners, who did not vote in favor of changing the constitution. So we see a clear division in Chile where the majority of the population wants change, wants something more inclusive, wants something that is deemed to be more fair. I think there's what remains nebulous is defining what is fair and what is more inclusive. But the point is that Chile has embarked upon what will be a 2 to 3 year process of rewriting its constitution. And there will be implications for the extraction industry. Nobody knows exactly how those will take hold. I think there is a general understanding in Chile amongst voters that mining is important to wealth creation in Chile, that much of the acquisition power of Chileans is owed to the foreign currency that mining generates. But there's also a strong sense of duty to protect the environmentally sensitive areas of Chile where mines operate. Now, most of them operate in arid jurisdictions to the north, but some, and increasingly, are operating in the more visited and protected areas of southern Chile. And I think that this is going to have some implications for miners. And until people really understand what those implications are, we may see certainly large-scale mining projects not going forward or slowing down to really understand where the regulations might change, particularly in areas that are deemed environmentally sensitive. In Colombia, Colombia has done took a very dramatic approach to its lockdowns, to the degree there, it was absolutely heartbreaking to see, but you had neighborhoods in Bogota and Medellin where people had run out of food, and they had to put red flags outside their doors so that the government would deliver food to them. This is a level of extreme measures that we've not in extreme poverty that we haven't seen in Colombia for a while now. And I think that it has really broken the spirit of a lot of the working poor in Colombia who've been suffering economically since the peso collapsed in late 2014, 2015, when oil prices fell. And the danger here is that all of that anxiety and angst that we saw in the streets of Bogota in Q4 2019, which was subsequently suppressed by COVID and the need to stay indoors, that angst has only grown. And we've seen recently protests in Colombia, and I think we'll see a lot more. There is pressure on the Duque administration, on the one hand, to continue to deficit spend, and keep that huge segment of the population from slipping down. Unemployment is presently around 14 to 15%. That is simply untenable in a country like Colombia where there's so little social safety net. And so the big concern is that Colombia, which has a remarkable history of centrist politics, a country that has remained incredibly centrist for over a century, the only country never to default in Latin America. There's a real chance that they're going to pivot to the left. Petro is leading the polls by double digits. And we'll see, of course, the right might coalesce around one candidate. If that candidate gets the second round, fear of Petro may again propel a winner from the right. But there's a real chance here that people are so fed up with the Duque experiment and just with the center-right politics in Chile in general that they may pivot left. And given that mining is a really misunderstood sector in Colombia amongst the urban voters and amongst the political class, that is a real problem. In the short term, we do see the Duque administration being even more of a promoter of mining. So for the next year and a half, we do see a government that is very supportive of mining. And given the fact that oil prices are low, coal prices are low, coal production was underwhelming because of the strike, that has necessitated the Duque administration to, rather than taking a sort of balanced view on mining and really holding miners to a almost unattainable level of environmental compliance, I think you're going to see them pushing through much more supportive of mining licenses. And that's going to be important for getting projects started in the next year and a half. Okay, Guyana and Suriname. Both countries have gone through leadership changes in the last 6 months. Guyana's, of course, was a contested election with certainly evidence of tampering. But we have the PPP back in power. This is the mostly Indo-Guyanese supported party. It is a party that has always been pro-business, but has been certainly guilty of lots of corruption in the past. The same cast of characters are back in, but what's different about Guyana now is a full-fledged oil boom with one of the most exciting new offshore oil finds finally moving forward. What led to the change of government was largely what was seen as an opaque negotiations of the contract with the Exxon-led conglomerate that was exploring and exploiting the oil. At the end of the day, I don't think you're going to see much of a change to that contract. If you do see changes, there will be aesthetic more than substantial. And we do think that oil will start pumping early next year. That is going to change the face of Guyana, because Guyana has always been a mining-centric economy. And now oil is going to dominate politically, it's going to dominate economically the country, and it's going to drive up costs for miners. Georgetown is a boom town, and the cost of real estate have tripled over the last 5 years. So for miners, the cost of labor, the cost of equipment, the cost of transportation, logistics has all gone up because of the oil boom. At the same time, we don't see a change in support for mining. We just don't see it having as much political importance. And that can be an issue if the national government is needed to step in and really support mining. In Suriname, the previous administration was, Bouterse was, he was a polemic figure. He was wanted for arrest in Europe and was on the Interpol list and is basically being stuck in Suriname for years now. His removal and his replacement is really, in many ways, sugarcoating change because he remains influential in that government. But it was an important change to change the image of Suriname and make it more palpable, particularly for European companies to invest there. Suriname and Guyana have a long history of informal mining in both countries. In Guyana, it has able to coexist pretty well with industrial mining. In Suriname, a little bit less so. And the government there has announced that it's going to take measures to try to tax and formalize that informal mining sector. We'll see if that actually happens. People are skeptical on the ground that they can make that happen. But at least you won't have, as was suspected in the past, where the informal miners were paying money directly to the Bouterse government to get help from them to, say, slow down the expansion of industrial mining in areas that they were very busily mining themselves. And so the friction between informal and industrial mining will continue, but industrial mining should have more government support. And in Mexico, Mexico's an interesting case. AMLO, of course, has been excoriated by much of the Mexican business elite for his, in some ways, aggressive pursuit of, in some way, a vengeful pursuit of certain industry and certain leaders, but generally more so the kind of regulatory uncertainty that his government has brought to certain sectors like the energy sector by virtue of his passionate desire to rebuild into some sort of historical might again, Pemex and CFE, which is not going to happen, but he's nonetheless trying to do so and putting about $40 billion of alternative energy investment in Mexico at risk. But in the mining sector, interestingly enough, he began with a fairly negative posture on mining. And in fact, one of the Morena senators very early in 2018 tried to pass legislation that would have made it very difficult for miners. And that was quickly shot down by the mining committee in the Senate. And that really kicked into gear the biggest mining operators in Mexico, Grupo México Peñoles. And they both lobbied heavily to change the AMLO administration's attitude on mining. And I think have done a good job at doing just that. And what we're seeing as capital flight has taken off in Mexico, we believe over $100 billion has left Mexico over the last 2 years. Mining sector is one that, of course, that's much more difficult to take capital out of the country. And so we're seeing more and more of a pro-mining stance by the AMLO administration. We believe that there will be litigation against the AMLO administration by the U.S. energy sector, who have been, in their minds, illegally shut out of opportunities that were opened up to them under energy reforms that remain in place. And that may lower political interference. But there's still two prevailing risks in Mexico to miners. And there are often two risks that intermingle. One is organized crime, which has only grown under AMLO's failed security tactics. And in some parts of Mexico, organized crime doesn't bother with mining. They don't mess with mining, places like Sonora. In other parts of Mexico, they're very much involved in extorting mining operations. And the fact that Mexico's labor structure, which up until 2000 was all under one umbrella organization, the CTM, which had a cozy relationship with the PRI, that all collapsed with the end of the PRI dynasty and the end of funding for these unions and constant updating of their contracts. And so some of these unions went looking for other backers, and they also fragmented. And in the mining sector, you have no fewer than 4 different mining unions, and they all have different financial backers, all have different tactics and objectives in mind. And of course, Los Mineros is the most feared by miners and the most aggressive at going after mining operations, not only for higher wages for their miners, but often involving in contracts outside of the workers of the mine. So these are the two top risks facing miners today. And I would say they've both, worsened over the last several years. Nicaragua, I was in Nicaragua last week, and it's become a very interesting mining jurisdiction for junior miners. The Ortega administration, which of course is very unpopular in some circles and frowned upon in some international circles, has nonetheless been very welcoming of mining, has been a sort of, it's a real presidentialismo in jurisdiction where the president has a really strict rein on any business decisions impacting foreign investment. It's a strange mix of, socialist rhetoric, extreme centralized control, manipulation of social media, et cetera, to weaken political opponents, but a very inviting environment for foreign direct investment, particularly in sectors that export and generate dollars. The government doesn't tend to mess with them. If you happen to be in a business that competes, or is, if you run a Nicaraguan bus company or transit or utility, there will be political interference in your business. But if you run a maquiladora, a mining operation, a forestry operation that is generating dollars and jobs, you'll find very little political interference. And unlike other parts of Central America and Mexico, organized crime is not an issue in Nicaragua, unless you count the military as organized crime. But the military is very much under the control of Ortega. The big risk to miners in Nicaragua is the reputation of the Ortega administration. And what we believe will be a highly contested election next November. After the 2018 massacre, where over 300 Nicaraguans were killed by armed forces and secret police, the support for the Sandinistas fell to record lows. The opposition has been kept fragmented and weak by very clever social media campaigning by the Ortega administration. But it would be difficult to assume that he's going to have an easy victory next November. And that's going to lead to controversy and maybe international condemnation. And now with Biden in power, the US may join the Europeans in condemning those election results. That is going to obviously produce a certain degree of stain on anybody doing business in Nicaragua. So if you can handle that kind of reputational risk as an operating environment, miners tell us that it's a great place to operate. But that reputational risk is something to be aware of. Last but certainly not least, Peru, which has gone through political convulsion over the last month, as Vizcarra faced his second impeachment vote, and it went through. It was then deemed, and a political opportunist, Moreno, was put in place. That was deemed to be constitutionally very questionable, and he quickly resigned. And we have a third president in place this year, who's more of a technocrat and seen as an interim candidate or interim president until elections early next year. On the positive, what you have is a real division. The public generally in Peru thinks that Congress is a bunch of thieves, with like 12% support. But Vizcarra, who was seen as a competent and sensible leader, still enjoys over 60% support. So that bodes well in terms of, whether he becomes president or not is more about the type of president that we will likely see in Peru. Hopefully will continue to be a pro-business politician. The angst and anger that has arisen in Peru as a result of very strict COVID shutdowns and massive unemployment is not being directed necessarily at the president, but more at a dysfunctional Congress. Now, the reality is that Peru has spent lavishly trying to keep people out of starvation and has done a good job with that, but at great cost. But again, without the ability to reactivate its economy quickly, what we're seeing is the fiscal need to keep financing those weak segments of the economy. And that is putting Peru in a sort of historic fiscal deficit levels. And right now, because of their very low debt levels, they can get away with it, but not for too much longer. And depending on who's voted in next year and depending on the price of precious metals, we could see political pressure, as we saw with Ollanta before Ollanta was elected, to raise royalties and taxes on miners. So I think Peru, at the end of the day, when it comes to mining, does sit down with miners and does find a middle ground. But we definitely see the potential for political pressure for more taxes on mining. That's it. I'm happy to open it up to any questions we have. I see we've got Andres has launched in the chat mode a link to our risk symposium information there. But if there's any questions, feel free to take yourself off mute and ask your question, or please, many of you are in the region right now, add your commentary. Would anybody like to add a comment or question?
John, I'll step in. Nick here. I thought it was a really excellent summary of the regional issues and sadly a fairly bleak picture, of course, leading into 2021. As we currently have personnel in Suriname, I can add a comment that it's a slightly fractured administration with a more centrist ruling party, but the vice president seems to be calling a lot of the shots. And he's actually one of the largest informal miner entrepreneurs of the country. So we're seeing a really interesting dynamic with a gold mine that is our client there, that vice president is a go-to guy. He's a guy throwing his weight around. And in the short term, he seems to be looking to establish his position and is providing some greater assistance to help push back informal mining on some gold mine concessions. But I think in the longer term, that will probably wane. And we do see just continuing instability, including in the police force. They look to do a change and restructure of it, and the police almost went on strike. That was narrowly averted by the vice president stepping in just in the last days. And so it's a little chaotic on the ground, and support that is being promised doesn't always come through. And a challenging environment continues, particularly with the gold price at its number right now, and of course the economic pressures and poverty that many Maroons face in the hinterland. And there, I would say it's not just the Brazilians; it's very much a community business and an activity and livelihood that's been going on for over 100 years by the Maroon former slaves brought into Suriname, as well as an influx of Brazilians. And so very interesting dynamics and some similarities to other areas. I just thought I'd give that update.
No, appreciate it, Nick. I think it's great having a vice president in charge of mining who's a miner himself, unless your interests collide with one of his 18 concessions that he owns. And so the potential for conflict of interest there, of course, is certainly always present. But yeah, it's interesting. I mean, when we talk to people, they told us it's a new face on the old, or it's lipstick on the pig, as they say. It's much of the change is aesthetic, and it's really to appease to European investors who are very, very sensitive to reputational risk. but at the end of the day, the operating environment is as much as it was previously. And I think, you know, at the end of the day, Suriname has good infrastructure. It has great geology. It has reasonably good local talent. And what it comes down to is just having great relationships with the government, and particularly key individuals like the vice president. And any other thoughts, comments people would like to share?
Yeah, I've got one. John Williams here. Can you hear me?
Yes, I can, John. Go ahead.
At the outset of the talk, you mentioned that 80% of the issues that mining companies face with that are the most difficult are at the local level or the closest to the project site. I know that you've only been talking about macro level policies in this talk, but I wonder if there are any countries that you would signal out where the degree of difficulty or relative ease of dealing with the local community and local contractors are significant enough to offset the risk at the national level or significantly mitigate it.
Right. So you're asking jurisdictions that say have great national level support for mining, but the local issues can really hurt you, or vice versa, where, you know, maybe the national risk numbers don't look great, but you have great local support. Is that what you're?
Exactly.
Okay. So I'll give you a couple examples. Guyana is a great example of a place where, you know, if you've got, I don't know, if you've got a 20-something analyst in your office looking around the world at jurisdictions and doing sort of country level risk, Guyana is going to score high in terms of risk levels, history of corruption and political violence, and et cetera, et cetera. But Guyana is very unique. And I would say all of the Guyanas, but particularly Guyana is unique in the sense that it doesn't have the same kind of political and historic baggage that it does in other parts in the world. In many parts of the world, the historical baggage of mining comes from this image of the Spanish, of Westerners, of foreigners coming in, exploiting the land, exploiting the people to get to those resources, and not delivering any benefits. In Guyana, it's very much, the attitude around mining is much closer to what you might have in, say, Canada or even the US back in the 1800s, the 49er spirit. If you are a working class Afro-Guyanese, there's a good chance that you cut your teeth at some point of your youth going out into the bush and panning for gold and making some money. And it's almost like a rite of passage. And so you have incredible national support and community support for mining. Now, if you really shut down informal miners and you don't let them operate at all, then you fight against that. But if you can coexist with them, you're going to find that mining in general is very popular. The other extreme is Colombia. Colombia is a country where you have great, Colombia gets great grades when it comes to the rule of law, consistent pro-business government. This is a place, if you talk to the lawyers in your company, they'll tell you, no, Colombia is a place we can do business. Well, the problem with Colombia is that mining is not understood by the voters, the urban voters in Colombia. And gold mining is still, in spite of investments made in recent years, is still probably 80% of all the gold extracted in Colombia is informally extracted. And a lot of it, unfortunately, whether it's by the miners or the processors, is involved in the laundering of illicit activity. And so the image of gold mining in Colombia is terrible within the urban classes. And therefore the political classes, who have even less backbone than they used to, are beholden to public opinion. And so the political classes also are very much afraid to support mining efforts if there's any kind of opposition to it. And so, this is why you really have to go deeper beyond that national level of either support or lack of support, or lack of, good good numbers that might frighten away your sort of country level analysts.
Great points. Thanks.
You bet. You know, this is a really fundamental point. When I spent, I guess, 3 years ago, just going around talking to the financial community in London, New York, and Toronto about how do they finance mining operations, I was struck by what I saw as frankly, a broken system whereby, because financing is so competitive, the financiers rely mostly on the miners to self-report what the issues are and to essentially self-audit and bring that sort of risk report to the financier. And then the financier looks at it, and all of their modeling in terms of how they cost risk is 90% based upon national numbers. The mining laws in place, how the government's perceived, rule of law, all that stuff. And almost none of the cost modeling, discounting, and valuation modeling was related to local social support, community support, local stakeholders, local political interference, local crime and labor issues. None of that was priced in. And frankly, everyone was kind of they didn't know how to price it in. And I still would contend that there is not good enough models out there for pricing in these local risks that are a lot more subjective, they're a lot more costly, and cost more time to understand in a due diligence timeframe, which is often compressed. But then how to price that in, and how do you use that to discount or to add to the needed returns you have to get as a lender or as an equity investor, how you value that asset. I would say that the industry is still struggling with that process. But until they figure that out, they will continue to get caught with their pants down when it comes to local risks. We got time for one last comment or question. If there's any financiers on the line, I'd love to hear a rebuttal to what I just said. Okay, well, look, we've reached our hour. I want to wish everyone happy holidays. We will resume we normally hold it the first Tuesday of every month, but given that many of you will be out until the second week in January, we will therefore host this meeting. I believe it's Tuesday, January 12th. So keep that in mind. You will get, of course, receive reminders, and we look forward to having you back. Again, it will be, I think, a fortunate moment for us all to put 2020 behind us. And let's just hope that all of the hope we've invested in vaccines and other instruments of change for the economy and the health of these countries comes to play, and that we do have a better year next year. So thank you again for participating. And we look forward to seeing you again in 5 weeks from now. All the best.